going to be a multi-topic class. First of all, many of our different tools, indicators, and systems give alerts and signals to buy and sell by themselves. But whenever you find multiple ones of our tools, which all work by themselves, that all happen at the same time or within a few hours of each other, you have a much more powerful signal. And that's why we teach so much information in our classes, because the more you know, the more patterns and signals you can recognize in real time, the higher your odds go for a higher winning percentage in your trading and for catching more pips when you're right. One of our tools is the FX Total View, and this is kind of wide. It doesn't even fit all the way on my recorded screen here. But one of the things that I like about it is it has a column called up, down, and how many days. If any currency is up or down 3+ days in a row, it shows up here. And I prefer ones that are up 4 or more days. But typically anything that has gone up 3 days in a row, if it does go up the next day and it hits our upper containment bands, it's usually likely to pull back at the very minimum to the hourly moving average, which should give you about 30 to 50 pips. Or it could go all the way to the lower bands, which could make you upwards of 100 pips. So the euro yen was the one that was up the most. It was up 7 straight days or more in a row. That I only label it up to 7 days. It might have been up 8, 9, or 10. But regardless, it was up 7 or more days in a row, very likely to reverse. On top of that, on Sunday, we get a 4-hour trend reversal triangle. These big yellow triangles almost never show up on our charts, maybe once every 2 or 3 months for each currency. So when you see this, typically you're going to get a 100 to 200 pip counter trend move. So for one, this one was up 7+ days in a row, straight, up, 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 7 days plus more, and you got this counter trend signal here. So on Sunday, you really could have been looking for a nice little couple-hour sideways rectangle pattern, and this one's more of a wedge, which I like every bit as much as regular rectangle patterns. This is a pretty decent place to get short, and you'd get out when the trailing stop get hit. Or you could just hold in this to the lower band, because this is very likely to fall to the lower band, which initially is up here at 108. You're likely to make over 100 pips. You also can use it to scalp, because it's very much likely to hit the lower bands, and in this case you can see it went even further down. You could have just scalped it short, got short, made some money, got short again here, got out with a small profit. I wouldn't have taken this one. When it broke down underneath the hour, that I would have went short with a loss, came back up to the previous week's high and failed, get short again, and usually, the lower band's a good place to get out. And the last trade of the day would have been if you were to take multiple trades in this, because you don't know how far down it's going to go. Usually currencies don't go and continue to go underneath the lower bands. I would have still shorted this. This would have been my profit target. I would have been out somewhere around 94. The 1.618, especially when it's underneath the lower band, is 80% likely to be the maximum low. And of course this went sideways and made one more wave down, which they almost never do. The only reason this, you might have even considered doing this, and I personally wouldn't risk my money on it, I would have sold here. I don't like to sell underneath the lower band, but this one was up 7+ days in a row. We have a signal here that typically leads to 100+ pip moves. Now, one of our systems is when a currency breaks from above to below the hourly, a lot of times it will come up to the hourly and kind of run out of steam. You can usually short it there, or in this case, it pulled back a decent amount. It tried to go higher, it failed at the previous week's high. When it came back down, you would go short. Just watch our videos on hourly moving average to see a lot more examples on this. I'm not going to go into that in any more detail here. Let's look at some of the other currencies for some high probability trades. I sometimes move my monitors around so it messes up my charts. All right, here's the pound dollar. This one gave a trend reversal circle, which typically proceeds if the pound dollar were to go up another day or two in an extreme amount, you would likely get a triangle. It's very rare to hit. This is a currency that was very strong. It pulled back to the hourly. At this point, you're looking to buy it here. If it had held support and started to go up, you would have. In this case, it didn't. It failed. One of the reasons is this signal here. It's also probably 75–80% likely to hit. And when it breaks from above to below the hourly, comes back up and tests it here and can't get above it, I typically go short. I probably would have got out of this with a 5 pip loss, maybe shorted it again right here. maybe 3 pip loss. When it came back up to the hourly, failed to get above it and broke down, I would have went short right here at 66. You have your fibs off this last wave, and it hit the lower band. Didn't really have that much weakness. I would have been out of the whole thing somewhere around here at 36 for a 30 pip win. So you can see you're not guaranteed to win on any trade. You might have a loss, another loss, and a break even, and then another loss before you get a 30 or 40 pip win. Now this one later on came back up to the hourly, and I would have went short here, probably made 5 pips on the first one, came back up again. And notice there's more momentum to the downside than green momentum to the upside. And the second one, I would have probably got out somewhere right here. Here in the euro dollar, you can see that it also was trending up and was above the upper containment band. These are narrow range patterns which show up on 4-hour data. Anytime you have a narrow range pattern, it tends to signify a big trend is going to continue or is on the way. This is a low volatility pattern. It's very hard to predict price at all times, but volatility is very predictable. You have high volatility, which is usually followed by low volatility. You can see that high volatility, low volatility for many hours, and then high volatility again. So volatility is very predictable. Narrow range patterns tend to precede big trends, and especially if you look at a daily chart and you see the euro dollar the last couple days or a week or two has been up a lot. It's due for a pullback, a decent size 150, 200 pip pullback. When you see this, it might just be the start of that, and when it finally breaks underneath the hourly, like right here, false breakout back above the hourly and back down, you're short, the rest of the day. This one also had multiple trend reversal signals, and just like the euro yen, you can see it pretty much reversed the rest of the day, down about 200 pips. So these big yellow trend reversal signals show up on the 3 and 4 hour bar. The triangle is just, I've never really seen it not lead to pretty much an entire day down activity. It typically will find at least 100 pip moves when you spot it. Here in the dollar Swiss, notice the narrow range pattern, which, like I said, tends to precede big trends, and not always immediately. Sometimes it takes 3 and 4 hours, and sometimes you have a false breakout up, and then when it breaks out down, the big trend happens to the downside. You don't know direction. Typically, when you get these patterns underneath the hourly, you don't want to be buying them. You want to sell underneath the hourly, and if you have one of these narrow range patterns above and it breaks out through the high, you want to buy. Now in this case, it preceded a trend. When it went sideways here and broke out from a below to above, you might want to buy right here, and it really didn't go anywhere. You might have made 5 or 6 pips, had a false breakout down, and then when it came back above the hourly, you want to go long, and you can see it kept you in this trade from around 55 all the way up to 86. So that's a nice 31 pip move, which another reason to get out there was it was a fib target of this. Rarely do they go above the 1.618 fib target. Another reason to be looking for a buy in this currency, getting back to how I started the class, was our down 3 days in a row showing up on the hot list here. So again, any currency that is down 3 days in a row tends to reverse up the next day. And you can see that's exactly what happened with this currency. Came down, was near the lower containment bands, and you might have started Sunday out by looking to buy here, small profit, small, and then this trade here, which might have been to a small loss, this trade right here. And when a currency is down 3 days in a row, it makes sense, and it's not unreasonable to expect at least a 2-wave move. So when this took off, draw your fibs on there, and if it would have triggered the trailing stop, you might have not gotten out. There's certain times where you need to know when to break the rules, and this is one of them. If a currency's down 3, 4, 5 plus days in a row, narrow range pattern finally starts its move up. Obviously the weekly, monthly trend are down, but there's a lot of factors that are telling you that this is likely to go up today. So in this case it didn't hit the trailing stop, but you might have, if it did hit the trailing stop, keep your initial stop, which would have been down maybe underneath this swing low here, had a wider stop, and just kind of either let that get hit and expect a 2-wave move. And that way, when you got into this trade, maybe right here at 55, you're looking to get out near one of these fib targets up here, and it pretty much went up to the whole number you made over 40 pips on that trade. I'm going to finish this general class off with this example here of the Australian yen. This is a trend reversal signal. One of our systems also is looking for, or one of our entry methods is looking for a sideways rectangle pattern. And a lot of times they start like this with a little bit higher volatility and then the volatility shrinking. And because of this counter trend signal right here, you have a nice little breakout right here, which in the first case doesn't lead to that many pips, 63, trailing stop is at 42, so you made about 20 pips. Then you got a little pullback here. Notice the way down it has more weakness than the way up. This is pretty significant strength. It's not at or above the 80 level. I would prefer something like this. When you have extreme weakness followed by moderate strength like that, it's probably about 75% likely to continue down. But on this pullback, you would have went short maybe once it breaks these lows here at 53. You always want to draw your fibs on the last wave. And it came down to the lower containment band at 1.382 and kind of went sideways and got you out of your trade here at 20. You would have been short somewhere up at 52 for a nice 30 pip win. Because of this signal right here, most of the time we don't want to sell the lower containment bands. But because of this, we might in this case, because it's not too far underneath that band. It's kind of right at it. So you short it here. And because this one does have a weekly monthly trend that's up, at least earlier in the day, Control F brings up the Fibonacci. You can sell this right here with the first or second fib target. 80 makes a good profit target. Anytime it goes below the 1.618, you're waiting for it to stall and go back up, and when it does, you want to get out. So you might have got out here somewhere around 74 and snagged a few extra pips. You would have been short this at 10. So even if you got out at 80, you made 30 pips on that.